your update to investors, this number that you quoted was massive. Savings rate, roughly 20 trillion US dollars. The total bad debt exposure on real estate is roughly 1 trillion. So you have I wouldn't call it a coverage ratio, but about 20 times. And so when I read that, I went online and did a little bit of research. In the US, the household savings rate in aggregate is only about $1.1 trillion. And so I was like, well, what's the equivalent of the sort of Evergrande exposure that you would have in the US? And I think commercial real estate is probably the closest apple-to-apple comparison. That's roughly $850 to $1 trillion.
And that's just commercial real estate.
That's just commercial real estate. So coverage ratio there is roughly 1.1 to 1 versus a 20 to 1 coverage in terms of real equity versus bad debt, right? So, and I know it's not a fair compare, it's more academic than anything else, but it really shows at least where the pool of liquidity needs to be tapped.
Correct. I mean, I think it definitely put things into perspective, if anything, that the situation, yes, okay, is bad because the sector has been a drag to the economy, but I don't think it's catastrophic. And like you said, the real growth driver isn't going to be coming from that. It's going to be how do you unlock that 20 trillion US dollars of savings that are just sitting in banks at the moment. If you can tap into that, even just, let's say 10%, that's already more than any government stimulus can implement. And it's immediate. When government announced stimuluses, just like what they have, I mean, it takes time for that to filter down into the economy.
Okay. And just for the audience, what did they announce for the stimulus? Because NPC came up with a couple of things. Break it down for us.